Silver has been the best performing commodity of 2016, and in appreciation of our listeners, Palisade Radio and Palisade Research are giving away a free American Eagle 1-ounce silver round each and every week for the rest of the year. Just visit palisaderadio.com and enter your email for a chance to win. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. And before we get started today, I just want to announce this week's winner for our silver giveaway, which we've been doing on palisaderadio.com. It's Paul from Windsor. We're going to be sending Paul a free 1-ounce silver round, which has a little bit less value today than it did the day before, and a great day to get our esteemed technical analyst, Jordan Roy-Byrne, back on the show. Jordan, welcome back to the program. Thanks for joining us again.
Thanks for having me, Colin. It's my pleasure.
Yeah, for people who don't follow your work closely as I do, you put on a hedge yesterday on your gold positions there, and that's been of huge benefit for your readership today, as gold prices are currently down about $40 per ounce. I think the HUI is off 8 or 9%. It's fluctuating between that. And this is Tuesday, October 4th that we're talking. Jordan, whenever you get a sell-off like this, where it's not just $20 but $40, gold investors are probably getting pretty concerned if stop losses have just been triggered, or if this is a violent sell-off, which is going to take some time to recover from. I know you haven't had a full chance to analyze everything, as we're just in the midst of it now, but what are your thoughts on today's sell-off?
Well, I mean, Colin, I was looking for precious metals to come down to these levels, specifically the gold and the gold stocks. With respect to gold, I see it's trading right around, let's see here, about 1269 or 1275 according to this chart. I was looking at some very important support kind of in the 1260 area, and with respect to GDX and GDXJ, I was looking at, we see GDX is down just below 24 today. It has support around 22 and 23. So if you look at those two things, it's we're very close to my downside targets that I was looking at. And then GDXJ has come down to 39 downside target that I have. I mean, that could come down a couple more dollars, but those are the levels which we should probably look for a bounce. And then just in the bigger picture, I think it'll just take some time for us to know if there's still going to be more downside in the weeks ahead, or if we're going to recover at the end of this week and recover at the end of the month. That's what I'm really going to be watching for, Colin, is how fast do we get a recovery? I mean, this huge drop is at the beginning of the week, so you'd like to see a big recovery into the weekend. That would show strength, and also a recovery into the end of the month. I mean, if we can recover this month and recover these losses, that would be a good sign. If not, then maybe we could trade to a little bit lower levels than I think. But just getting back to the GDX, looking at the bull market years we've had in gold stocks, the 400-day exponential moving average. I usually use simple moving averages, but in past bull years, the 400-day exponential moving average has been really, really good support for gold stocks during bull market years. And that right now for GDX comes in at about 22.35. So we're at 23.71. So I think more likely than not, we're definitely going to see a bounce here at some point. If not in the next couple days, then next week. We should see a pretty good bounce at that time. I'm on the bullish side. I think this is just a correction, but if I'm wrong, maybe this correction will last longer than we expect, maybe a little bit longer than this month. But for the most part, not to get into sentiment, but for the most part, once this technical damage passes, I think it's a buying opportunity.
Let us elaborate a little bit there. You're talking about a recovery, and you are coming from the gold bull perspective. Is there any chance in your mind, after seeing today's sell-off and the slowdown we've had over the last month or month and a half, that this was a false move, or are we confirmed that we are indeed in a bull market?
No, I think we're in a bull market. I mean, to say it's a false move, I really don't see that. I mean, if you go back to January and where and how we bottomed and just the valuation levels that the gold stocks were at, we're definitely in a bull market. But sometimes, I mean, looking at GDX, now it's we get a little more weakness. It's probably going to be down 30%, which is normal. I'm a little concerned about the technical damage, but that's just the technical analyst in me speaking about that. I mean, it just tells me that we could come down a little bit more in the gold stocks, but it's not something that I'm uncomfortable with. I mean, looking at the technicals were set up. I mean, I in my video update about a week ago, I mentioned that I was expecting a move lower. Fundamentally, yesterday and today, we're seeing bond yields back up quite a bit, and so that is negative for precious metals, just in a general sense. Unless inflation is really escalating. I mean, that's a whole nother conversation. But basically, we're talking about real rates, and negative real rates is the real driving force for precious metals. And so what we've seen including today in the last couple of days, is rates have gone up quite a bit. And so therefore that just in the very short term, that makes it less desirable to hold a zero yield instrument like gold. But in the bigger picture, I really don't see anything changing on the fundamental side. It's just, I mean, depending on what index you look at, we're kind of correcting and consolidating. And for most of the things that I look at, it's been we're in the, we're a full 3 months into this period. I mean, we did make a false new high at the beginning of August on some indices, but generally speaking, looking at what I'm looking at, I mean, we're in the third month of a correction consolidation. Well, I mean, after today, I shouldn't say consolidation. It's clearly a correction. And I mean, that's something that it could last another month or maybe another 2 or 3 months. I don't know at this point. With respect to gold, I think we, looking at the key, let me just bring up a monthly chart here, because the real key monthly moving average for gold is the 40-month moving average. I mean, I look at the 20-month and the 40-month. The 20-month is at 1203, so we're a very good distance above that. But if you go back and look at gold throughout its entire history, the 40-month moving average has been extremely significant. And so that's at 1236. I mean, we've come down to about 1270, 1275 today. So there's still a good distance there. I mean, as long as we're holding above, those targets like 1260, 1235, 1235 especially, because that's the 40-month moving average. I mean, as long as we're holding above there this month and the month after, then we're going to be fine. So I know that's a pretty long answer. We're still in a bull market. It's just a question of how much longer is this correction going to last? Is it going to last a couple more months or maybe a couple more weeks or a month? I don't know at this point, to be honest.
Well, Jordan, as far as I can tell, bull markets are characterized by having more days going up than down, and bear markets, like we were in for the past 5 years before January, it was always having these 4 or 5 down days for an up day. And maybe today, with having this very steep sell-off, if it doesn't continue, if it doesn't persist past the next few days, it's actually good in terms of gold bulls. Have you given any thought to just the amount of days the market moves up versus down?
I have not given much thought to that, but one thing I will say is looking at, I've been cautioning people not to buy. I mean, now, I mean, this is the time where people want to start buying if they haven't been buying, because just looking at the miners, I mean, we're not quite at a 30% correction yet, depending on what you look at, but we're going to be there. It's just a better buying opportunity than a couple weeks ago or a month or two ago when we were at the top. So with respect to the number of down days, I'm not really sure. I haven't researched anything like that. I mean, we've been in a correction here, a pretty sharp correction the last couple of weeks. I mean, I'm looking. We've only really had like one legitimate up day the last almost 10 days or so. I mean, ever since that Fed day, which was a total fake out, we've been selling off aggressively, so we're definitely due to get a bounce soon. But that's the other thing I would mention. I mean, it's much different than a couple months ago when everything was going up and people were worried about the correction. Now we're getting the correction, and if you have lots of cash to put to work, now is the time to put that to work. I mean, you don't want to try and bottom tick everything, but just with how oversold we've gotten, and if we go down a little bit more, we'll be even that much more oversold. I mean, that's the time you really want to step in and buy, because the worst case scenario is, if you do buy here in the short term, the likely worst case scenario is, maybe you might go down a little bit at one point, or maybe you have to hold a couple months before you start seeing the trend revert back to bullish. But in the general big picture sense, this is going to be a very good buying opportunity. I'm just not sure if we're going to V rally immediately, or if it's going to take a couple weeks or a month or two.
Today, gold's off 3%. Silver's looking like it's off closer to 6%. Is that simply a factor of silver being more volatile and acting almost as a leverage play against gold, or do you put any significance to silver's steeper decline?
Well, silver's actually been performing better than gold, but that being said, in the weekend update I did expect, if we do come down as I expect, silver's going to go down more. It kind of had a bearish setup. It made like a bearish flag pattern over the last 5 weeks or so, and I didn't see where. Let me see where silver is right now, trading at below 18 in the 17s, and yeah, I mean that can come down a little bit more. It's still well above the 200-day, 400-day moving average, but yeah, I mean it's not surprising on this type of day to see that kind of decline.
Great. And in terms of coming out of this, you just said you don't know if there's going to be a V-shaped rebound or if it's going to be something more gradual, but assuming that we're getting towards the end of this correction, thinking out towards the end of the year, I suppose, we're just kind of entering into October here. We've got 3 months left in the year. What happens next once this correction's over? Do we start moving up very quickly again like we saw January, February, March, April, or is this more of a gradual stage of the bull market that starts to unfold?
I wish I could say right now, but it's difficult because we're so early in the month and we're early in the week. I mean, the last editorial I did, I was talking about monthly charts, which looked bearish for the sector. And the month, the monthly candles are more significant than the weekly candles, which are more significant than the daily candles. And since we're only on a Tuesday today and we haven't even closed yet today, it's difficult for me to say exactly, given that we still have the rest of the week and we're so early in the month of October. It just kind of depends. I mean, do we see? I mean, if we see a big recovery into the end of this week, in October we kind of get the same recovery, and October doesn't turn out to be a bad month, then that will be a really good sign that we can start moving back up again. But on the other hand, if it takes more time to digest these losses, which is possible, then it might be. I mean, it could be anywhere from a month to a couple months before we start to move back up again.
Jordan, your ardent followers would have been well protected today with your hedge that I'd mentioned you put on, your J-Dust hedge. Are you going to look to exit that trade today or in the next few days and start to redeploy into your favorite mining companies, or are you in a holding pattern in terms of trading?
Well, I mean, I like to just be a buy and holder, but with respect to your question, yeah, I'm probably going to sell it. If I don't sell all of it today, I'll sell half of that, because I'm not trying to pick tops and bottoms. I was just trying to hedge this, what I thought there was 10% downside. I didn't think we were going to hit that today. So I will at least sell half, if not all of it. When trading these or using these hedges, when you get a big pop, you got to take that profit right away, because a lot of that can disappear just in one day. But yeah, I'm heavily invested myself, so I don't have a ton of cash, but I'm looking for deals, and I think at some point, if not this week, then sometime this month, I will be putting money to work, because even though I sound a little unsure about the immediate future, I'll go back to what I said before, where I don't see a huge amount of downside left in terms of price. I mean, there might be a little bit, but it might just, as far as time, we might need some time to kind of digest these losses and kind of chop through it for a while. And Colin, I always use like a 20% mental stop of my position. So if you're putting a 5% to work and use a 20% mental stop, you can only lose 1% of your portfolio, and that's just that's kind of how I make these buy decisions. I want to see something that has good upside potential, but I want to get into that when there's low downside risk, and I do see low downside risk right now. If you're looking at stocks, you want to buy those fishing line charts, assuming you like the fundamentals of the stock. Think of how a fishing line goes into the water, and if you see that, moving from left to right on a stock chart, where you get that decline, where it just, it's just like a vertical decline. The last couple of days, if you see something you like fundamentally and it does that, you definitely want to get into that and buy it, because don't let the perfect be the enemy of the good. If there's good buying opportunities out there, put some money to work. Don't try and wait for a perfect entry point, because you're just going to trade yourself in and out of it way too often.
Great. And finishing up here, Jordan, an open-ended question for you. A day like today, as a trader, any suggestions to readers or listeners, maybe for those that didn't have a hedge on and just feel really beaten up today? I guess part of your advice would be just hold on, because maybe the worst of it is over. But anything to add to that?
Yeah, that's what I would say. We're in a bull market, and we had a huge move higher and a huge recovery. And like I said, we're in the third month of this correction, and sometimes these corrections are very large consolidations. I was just looking last night at from 2000 to 2008. We had three of those. One lasted 9 months, one lasted, I think, 5 or 6 months, and another one lasted 5 months. So the correction that we're seeing is not out of the ordinary. We're still well above the long-term moving averages. And look, buying and holding is the way that you're going to make the most money in this bull market over time, not trading in or out. I did have a hedge on, but that's just with the little cash I had, just a way to make some money while the trend, the short-term trend was going down. So, aside from that, I'm a buy and holder, because I believe that's how you're going to make the most money over time in this bull market, not by trading in and out of it every day or week. That's just not going to serve you as well. Just review the fundamentals of the things you own, and if you look at something and you're wary about the fundamentals or something else, then maybe you want to sell that and switch it into something with stronger fundamentals. But that's what I would say. Just review everything you own, why you own it, and the fundamentals, and make sure there's a reason that people are going to come back to that and start buying it, when we start to get the next move higher.
Jordan, thank you so much for coming back on the program today. For all of our listeners, Jordan does put videos together just for our Palisade Radio listeners, and you can find those by going to palisaderadio.com and looking in the left column, which is exclusively dedicated to Jordan's videos. You can also go to thedailygold.com and sign up for Jordan's free or premium newsletter service. The premium one is where you'll get trade advice like Jordan put out yesterday on hedging with J-Dust, which has been a fantastic trade today and a quick gain for his listeners. Jordan, thanks for coming back on the program.
Thanks so much for the opportunity, Colin. It's my pleasure.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?